Hello there. Welcome to Relative Strength Index Indicator Lesson RSI Relative Strength Index Indicator. This is your host, Vincent Mungai. I hope that these uh, lessons are informative to you and they're also educative. I hope they are making your trades become better. Now, we are in a section in this intermediary course where we are dealing with this module, and in this particular module, we're dealing with various indicators. One of the ones we are beginning to deal with today is a relative strength index. What is relative strength index? What is it all about? How does it come into play in our trades, and why is it necessary to use it? We begin by first of all exploring a thing here. The relative strength index, RSI, is a momentum oscillator. Please underline that. Momentum oscillator that measures the speed and change of price movements developed by J. Wallace Wilder. So this man, Wallace Wilder, he noticed a way of calculating. He noticed something to deal with the momentum, and he was able to develop this particular indicator. It oscillates between 0 and 100 and is typically used to identify overbought and oversold conditions in a market. So, friends, what we are saying here is this, that this particular indicator will simplify some of this analysis for you. You don't need to go through into the detail of each and every calculation. Some of the things that you need to know about a market will be available to you because of using this particular indicator. It will depict, it will show you something to do with the momentum. So RSI deals with momentum. Let us move into it and see how it does that. So there's a formula here, and I don't want you to be bogged down with mathematical calculations, but just for the purpose of knowledge, there's a formula there that the particular indicator uses. Every indicator uses a formula. This particular indicator uses this formula. RSI is equals to 100 minus into bracket 100 over 1 plus average gain over the average loss. Don't worry about that calculation, friends. And that explanation is there. RSI is equals to 100, 100 over 1 plus RSI. Don't you worry about that relative strength index calculation or formula. The bottom line is this, and come down to this part. How do you interpret it? How you interpret it is what you need to understand here. How you interpret it, that the calculation is already there. When you open your particular platform and you place the RSI, it automatically does that calculation. It does that particular calculation with that formula that was placed in it by the original programmer. Yours is to look at the result. Now, that result, we have heard that there is an oscillation. An oscillation is a movement, a wave movement. An oscillation is a movement between 0 and 100. And when it's around 70 onwards, it's termed as overbought. When it is below below 30, we have a term for it right there, and those are the things that we're talking about. That it's there to look at the oversold market condition. It shows the oversold, and it's there to also show uh, the overbought. Okay, so overbought will be at the top there. It has been bought. It's at the top. Oversold will be, it's down here, it's below 30. So we will now go ahead and understand what happens with this above 70, below 30. And by the way, there are people who change, and they change these values to be 90 and 10. But let's deal with what is the standard, and that's how the original gentleman welder meant it to be. Up here at the top of my image here, we have the indicator and how it looks. It has those two lines, and then it usually comes up as a pane at the bottom of your trading platform. I know that some of you have dealt with it in the beginners class. Let's just move on and have a look at it. It identifies overbought and oversold conditions. When RSI crosses above 70, it indicates that the market is overbought. and a reversal to the downside might occur. Conversely, when RSI drops below 30, it suggests that the markets are oversold. And a reversal to the upside could happen. All right, confirmation of trends. Here we are seeing this. RSI can help confirm the strength of a trend. In a strong uptrend, RSI tends to stay in the overbought territory for extended periods without dropping below 30. In a strong downtrend, RSI remains in the oversold zone for extended periods without rising above 70. So how do we spot divergences? There is an explanation there of how you can spot divergences. Let me get myself out of the way so that we can read this part. The divergence occurs when the direction of the price tends, or rather the price trend differs from the direction of the RSI trend. I'll take that again. Divergence occurs when the direction of the price trend, that's the one in the top, the price, differs, it's different from the direction of the RSI trend. So there are two kinds of divergences. There is a bullish divergence, which happens when the prices make new lows, but the RSI forms higher lows. That means it's going opposite. This can signal a potential reversal to the upside. Hold it right there. Hold it right there. I need to explain that a little bit to you. This is what we're saying, that there are some divergences that we can notice with the RSI. Here is the RSI, Relative Strength Index. That formula and calculation has already been placed at the bottom of our platform. So at the top of our platform, we are seeing the price candles, okay? But at the bottom here, we are seeing the oscillation of RSI. There are times when there will be a divergence. That means there's a split. The price is going one way, it's showing a certain trend, but when you come down to the indicator, the RSI, it's going the opposite. That is what you call divergence. Okay, that divergence signals something. It signals a reversal that is coming up. By the way, don't forget about these indicators. We're saying that it doesn't mean that it has always got to be accurate. There are times that it will be, the market will show you a particular thing, but other matters or other factors will change the whole scenario. So we are looking for confluence like we always do. So that could be one of the things. However, we are clear here that divergence, we can spot divergence, and that would be a good thing. So the divergence now would be that when we look at what the indicator is saying and what the price is saying, they are on different trends. That divergence can signal a particular thing. So quickly, let us now move from the issue of divergence and look at now a few other things in RSI that the risk management has got to be done. Okay, we're saying risk signals should not be used in isolation, or rather RSI signals should not be used in isolation. It's crucial to incorporate other technical indicators and fundamental analysis to confirm trading decisions. That's what I just explained. So stop loss orders should be used in order to manage these risks, as RSI signals can sometimes result in false or premature signals. So be alert. Okay. Now we're going to do a practical here. In the practical here, we're going to go down into our trading platform, and then we're going to place the RSI indicator and make snapshots of what is observed in two different choice pairs. So you choose a pair. For instance, in the diagram here, I've chosen the Aussie dollar and the Swiss franc. I've already placed down here. You can see what I've placed. I've placed the RSI indicator, and I'm able to look at how it's showing particular things that it is showing. So I want you to do the same. Go ahead, open a particular pair and place the RSI there so that you look at it. I've also placed the sterling pound with the what? I think with the Japanese yen. Yeah, these are things that you can place and then see how they are. Note, RSI indicators have been customized by programmers to give hundreds of combinations and information. I'll take that again. RSI indicators have been customized. They have been changed, yeah, by programmers to give hundreds of combinations and information. Therefore, for instance, in TradingView, which we are using for this particular course, there are so many RSI indicators, but you should choose one or a few favorite based on your strategy and trading style. All right. Like when you open TradingView, it's going to show you so many different RSI with stochastic, RSI with moving average, this, RSI with this. But I'm dealing with just a standard, and your trading style is what is going to determine which one you want. First of all, understand how the RSI works, the standard one. Then you can always look at the various variations that the programmers have created. Remember, pressing the gear icons on the indicator when it's open can allow you to change many settings and parameters. E.g., you can change the number of periods it looks at, that it's calculating, and even display colors to your liking, or move from lower panel it's appearing on to panels that are above. So what we are saying in essence here is that there are so many things that you can change when it comes to the RSI, or rather all indicators. You can change how the indicator presents itself. You can decide my color scheme is gray, so I don't want any red colors or what colors. All those things are things that you can change by pressing on the gears. There's some small gears that come up there. I am not sure whether my trading view is ready to boot up right now, but I believe that um, you can just check at the left top part of the panel that brings in the indicator. It should have some icons there. There should be a small gear. There should be some, 2 3 buttons there, dots rather. That means that you can open several other options. You can change some of the inputs. You can decide the periods that you want to look at. Speaking about periods that an indicator is looking at, you need to go back to the study on, or rather the lesson on moving averages. I think that's very crucial, because moving averages will help you understand. You can change the number of candles or the number of periods that an indicator is looking at. You can change those settings so that you can tighten the space. Don't get confused, kindly. Just stick with me and understand this. Alternatively, I think I can throw in a video that you can look at and see how somebody can change some of the features that RSI will give you. So let me throw it on the screen. There's this address I have here. It's a YouTube address. If you can just copy that, take a snapshot of that, and go in and check out that YouTube. This guy has a way of just logging on and changing RSI to do this and the other. I personally rarely use changed what do we call it? Changed indicators, or rather, this particular one I don't change it. I might bump into a reason for changing it in the future, but you can use that address there. Check out that YouTube video and see what this guy is doing with his RSI and how he changes it. However, I want to interest you in this one thing. I want to interest you in understanding these indicators and eventually deciding to use several of them one at a time. By the way, if you're you're in trading view on the free version, you cannot use more than, I think, 3. So you have got to remove one so that you can place the other. But you don't want to jumble and overcrowd your platform. You don't want to fill it with so much, clutter. What you want is to pick one particular indicator, like now RSI. Check out what it's doing. You can change a few features here and there and see whether it's helping you understand the market that in a way that you want to understand it. Then you can remove it, place another indicator, and also look. And all along, you'll be noting those particular things that you are noting about the market before you make your position known. So I think we need to look at some of the things called moving averages very soon. I think we should do that in the next lesson. which is we're going to be dealing with MACD, but we're going to interrupt MACD, moving average, convergence, and divergence, so that we can deal with that calculation. What is this that these people calculate in when they are giving us these indicators? They look at different periods, they look at different price ranges, they look at certain averages, and then they calculate so that they can visually show us, or rather visually depict, how the market is for us easily. So I think that's all there is as far as RSI is concerned. Don't be afraid of RSI. Go ahead and use it in your analysis, in your technical analysis. It's a good analysis tool, and it will help you understand quite a number of things where the market is concerned. So with that, I will just welcome you to the next indicator, which is MACD. Thank you.